Hello, hello. So glad to have you here for our first SARE National session of December. We have two this month, both focused on a similar topic that I think is going to be incredibly informative and helpful in your businesses and also in your personal life. My name is Jenny Anchondo, and I'm here as your host, moderator, MC of the event each and every week. And I do look forward to this each and every week so that we are able to connect with one another and learn together. Now, let me tell you about our speaker who will be here for this week and next week for a two-part series. Today, we're talking about personal credit reports. Next week, we're going to be talking specifically about business credit. So same topic, but really different facets of that topic. So Luis Morgan is a credit services consultant. And he is originally from Mexico City, but now he is based in Dallas, Texas. He is a bilingual customer services representative at Synchrony Financial, credit services consultant at LM Credit Services. Now, I love somebody with an eclectic career background and past, and that is definitely what he has. He started out as an architect in Mexico and in California, so working in the business world and then transitioning really into the media world. Gosh, he has worked as a radio host, he's worked for a magazine, he's managed teams, he's been the boss of these different productions, he's worked in video and audio and all of these different production components. And along those lines, he started working in the financial realm and learning about that, and has now sort of brought that into what he does today. And we are going to be able to learn from his presentation on personal credit. So, Luis, without further ado, I'm going to mute myself and let you take it away, and then we'll go from there.
Okay, well, my name is Luis Morgan. Thank you all for being here. And yes, today we're going to be talking about the personal credit score. And the main thing in credit score is you have no idea how many people actually ignore what their credit score is, how to manage their credit. There's different places that don't even care about their credit until it's too late. So we're going to give you just a basic. I'm going to give you just a basic of what the credit score is. And regarding the questions, like Jenny said, if you have questions, please bring it up as we talk about something specific. Okay, so starting with a credit score, there's a range. It goes from 300 to 800 points. Credit score is kind of like your personality in finance. So depending on how your credit score is, tells a lot about how you manage your financing. The lower the score means that you're high risk and you might not get a lot of loans or a house or an apartment or a job. So it's like I said, it's just a rating of the measurement of how you manage your payments, how you manage your finance. Okay, so moving on. Okay, so the credit score is used by landlords, insurance company, homeowners, even cell phone companies. Everybody uses a score to determine how good a loan they're gonna give you, how good you qualify for a house. You might have $100,000 and the next person has only $50,000, but if they have a better score, they're gonna get the house instead of you, because it might show the buyer, the seller, that you're a high risk, and they don't want to go into that. Same with renting an apartment, buying a car, or just getting a personal loan. So the credit score is very important in how we manage our lives. Okay. So there's two types of credit scores. One would be the FICO score, and the other one is a Vantage score. And it's just an algorithm that one FICO is the oldest, and then the three biggest bureaus decided to create their own. And that's how they created the Vantage score. And the difference between both is who uses FICO, who uses Vantage. Vantage is more used in personal stuff. FICO is more used in mortgages, housing. They use it in different scores. So you might have a good score in Vantage, you go and get a car, you buy a house, but your score is different because they're using maybe the FICO score and you've been reading on the Vantage score. So it's good if you are going to get a loan or an insurance or whatever to see both scores, see where you stand. Okay, so the three main bureaus are TransUnion, Experian, Equifax. The other thing is you might see TransUnion has one score, Experian has a different score, Equifax would be totally different. And it's because each company deals with different companies, has a contact with different companies. For instance, TransUnion is more like a personal thing. It deals with jobs and everything. And you might have a Macy's account that TransUnion is it's checking, but Experience doesn't care about Macy's. So the difference in score is going to be depending what you want to accomplish, and if you see the difference, one might be a 650, the other one might be a 635, and that's because some of your payments are not taken in consideration by Experience or Equifax, only by TransUnion. That's why you see the difference between one and the other. And again, TransUnion sees more about the jobs and all that. Experian is more about lenders, landlords, and Equifax more about more financial institutions. So that's the reason why your credit score you might have three different credit scores. Okay. So TransUnion is a private company. The three of them are private companies, and they all have the same purpose. And like I said, it all depends on what you want because they're all dealing with different companies where they're getting their information and their output is completely different. Okay, and there's actually five more credit bureaus that are not that important, like Innovis. Well, it's not that they're not important; they just deal with some different things. Innovis, if you were denied credit, that means Innovis might have something on you that the other three don't. And they're more concerned about your identity theft. So they're really more concerned about I don't know if the black web. I don't know if anybody knows what the black web is, but they monitor the black web very, very, very specifically. LexisNexis and SageStream, they're the ones that gather all the personal information from the people. And actually, that's one thing that we do first. As a credit consultant, we freeze the accounts on LexisNexis, SageStream, and another one, so they don't share it. If you freeze it legally and they respond, they cannot share your information because, as you noticed, if you get a loan and then you start getting emails and you start getting texts from companies you never even heard of, and that's because those two companies are sharing your information. So as a consultant, the first thing that we do is freeze those accounts. So legally, they cannot share your information. Okay, and the other two are just ours and CoreLogic, which like ours is business to business. They deal with debt collection and financial industries, and CoreLogic is more used for mortgages only. So they're more specific than all the others. Okay, so this is how your credit is divided. Okay, so it makes 100% here. The first 35% is your credit history. It's the way you make your payments, how many payments you've missed, how many payments have you been, are you behind? And so it's your, it's your payment history. If you're 30, 60, or 90 days behind, that of course lowers your credit score. After 90 days, most every company will send you to collections, and that's gonna hit your score really, really hard. Collections, you can dispute it. You cannot. Some people say, "Oh, I'm not gonna pay them. Nothing's gonna happen." Well, collections is the only one that can take you to court. Actually, take you to court. So if you say, "No, I'm not gonna pay the collections," you'll see them in court. Don't worry. But the thing about collections is collections buys the contract for a minimum. Usually it's about maybe a 40%. If you owe JCPenney $10,000, they might buy it for $4,000. Because JCPenney prefers to lose $6,000 than lose $10,000. And with collections, you can actually, um, like if you were in the market, you can actually deal with them and ask them to reduce the payment, and usually they do. Normally, they reduce it again, like a 50 or 40%, depends how bad your finances are. So, $10,000, you might end up paying only $2,000, but you got to be willing to deal and with the collection. And the collection stays in your record. Now it's up to 10 years. But that's what we do. We try as hard as we can to remove it from your credit score. Okay. The next 30% is loans and credits. Okay. So it's based on how much, for instance, if you have 5 credit cards, each one has $2,000 of the credit limit. That's $10,000. If you owe $2,000, that's 20%. And this is the other thing. If you, by any chance, cancel a credit card, instead of having that 20%, because $10,000 is going to become $8,000. So that $2,000 that you owe, it won't be at 20%. It'll go up to 40%. So that's really bad. So you should not ever cancel a credit card. Just let it die by itself. That way, it'll still affect you in the use, but as soon as you yourself cancel a credit card, they'll easily deduct between 4 and 7 points because you're canceling the credit card. Plus the usage, which will bring your payment and your credit score even lower. Okay, the length of history is how long have you had a score. Believe it or not, there's people that are called ghosts that don't have a score at all. Why? Because they use cash only, or they're illegal, or many other reasons. And there's a lot of them. So this is the length. So when you want to cancel an account, if it's your oldest account, don't cancel it. Just leave it. Just let it go by itself. Let the company cancel it, not you. Because then your score, your history becomes smaller, and then your score becomes smaller also. The types of accounts. The bureaus want to see that you have a loan, a home loan, maybe a personal credit, a credit card, any of those. But what they don't want to see is that you have 5 credit cards, because that's really a red flag. Let's say with 5 credit cards, you're a high risk because it tells them all you want to do is shopping. So if you want to get a loan, of course they're gonna say no. With all those credit cards, I'm not gonna risk my money. Or you're gonna get a very, very high interest on a loan. And also with the car, you're going to, instead of getting a $12,000 car, you will only be able to get a $8,000 or $7,000 car. So the combination of accounts is very, very good. Sometimes you can't help it. Actually, we recommend, if you can, have only one credit card, one loan. Because more than that, it becomes you're either a medium risk or a high risk. The last one is new credit cards, the increase. It's funny because with the credit bureaus that I was telling you that are not the main ones, those are the ones that come into play here. So let's say you're going to go for a loan. You're going to buy a car. Whoever is going to be the lender is not going to look into one company only. So it's going to look into 5 so they can give you the best interest, which is going to keep you happy. But the thing is, those 5 companies that they asked could be Capital One, could be many companies, Tree Lender, and all those. Each one is going to deduct 2 points from your credit score. So if you can go to get a loan or buy a car, try to do it through your bank. The bank would not do this. Because you don't want to end up if you go to CarMax and you want to get a car and you come out there with not satisfied, you go somewhere else, you have at least there five inquiries, and then the next place is going to have maybe another five inquiries. So that's really gonna hit you. So if you're gonna buy a car or anything that you are going to buy, try to go through your bank because they'll hit you. Okay, so who contributes to the credit report? The banks, the credit union, because they have to report everything. Your credits, your credit cards, lenders, mortgage, collections agencies, public court records. If there's if you go to court, let's say because of a collection or because you owe somebody, it doesn't have to be only a collection. Somebody um, takes you to court because something that you owe, they'll know about it, and the courts have to also declare to the bureaus all of that. Healthcare, if whatever you spend on healthcare goes there. Cell phone companies, utility companies, and believe it or not, with this I found out that if you've been paying, let's say, rent or mortgage for 1, 2, 3 years, you can actually submit a form to the credit bureaus and they will deduct points. I submitted my 2 years of rent and I got like 45 points raised. And then also with the cell phone and utility companies, since they have to submit their information to the bureaus, it can help you. Or you can call the bureaus and get the form so you can submit it to them. It's mainly just getting a ledger from the cell phone utility company or from the rent, and then just submit it to the three bureaus. And then you'll see your scores go up. I didn't know that, but that's awesome. Okay. Mortgage is a little bit different. What we were looking at right now is just the public, the main public. Mortgages, they use all three bureaus, but they take the lowest and the highest score and don't use it. They use the middle. So even if TransUnion, you have like a 580, no, it's not 580, like a 680, and the other one you have like a 620, they'll take the middle one because it's based on a different credit model. Even though they use the FICO and the other one, they have their own. As you saw in the six bureaus, there's one that's specifically used for houses. So, and also the time that they get the mortgages and the inquiries varies. Okay, and they don't care about your inquiries. If you want to buy a car and you have 5, 10 inquiries, they don't care when you're buying a house because they know that those inquiries are just like a kind of like a scam, like the dealers. And it makes sense because the dealer wants to give you the best interest possible, and sometimes that's why they call five over their friends and see who gives them the best. Okay, so the good things in good credit, you get lower interest in a loan or a credit card. Oh, by the way, if you can avoid store credit cards, I would recommend that. The interest is so high, different than a bank loan. Okay, you get better financing in anything that you buy. If you want to go for a house, you'll get the house. The higher your score, the more chances you have to getting a house. Like I gave you the example, if you have 100,000 and the guy with a better score has only 50 or 75, he's gonna get it because you might be a high risk or medium risk. You can get an apartment. Apartments also look into the credit score. Right now, jobs look into the credit score. Lower APR financing on purchase or rentals. Like I said, the employments, they're looking at the credit score, which really should be illegal, but they do it. Okay, and you can get more payment facilities. So instead of getting a 60-month, you might be able to get a 36-month payment. You will never see the collectors or the collection agencies. And plus you get a good history, a good reputation. And that means that you're more at peace at home with God, with your family. Mm-hmm. Now, the other side of the coin. If you have a bad credit, you will never see the collectors or the collection agencies. And plus you get a good history, a good reputation. And that means that you're more at peace at home with God, with your family. Now, the other side of the coin. If you have a bad credit, you're gonna have very high interest. Right now, the stores are running like 28, 29% APR, which is your annual percentage rate. So if you divide it by 12, you're paying like 3% a month on your purchases, which is very high. A bank will give you maybe a 13%, which is that's what you do want. Okay. So you're not going to get good financing. You might be denied the house, the apartment, any purchase or rental, the employment. If somebody has a better score and it's applying for the same job, he's going to get it. Okay, and instead of getting access to better payment, like instead of getting a 3 year, you might get a 5 year to do your payments. So that's more interest. That's even though it's a lower monthly, you're gonna end up paying a lot more for what you buy. You're gonna meet the collectors, the collection, maybe, hopefully not, and the court. Uh, you're gonna get a bad reputation, and that's gonna keep you awake at night. Okay, so the things that you don't do in credit. First, like I said, applying for a store brand credit card. Like I said, they're about 28, 29%, because I deal with this every day. And they have accounts that are, oh my God, I keep paying, but, and it doesn't go down. Yeah, because your interests are so high that you pay 100 and you're paying $80 in interest. So, and I usually tell them, just get a bank account, finish paying your card, and pay less. Closing accounts, like I said, if you're even though you're not using them, just put them in the drawer. Let them die by themselves. Don't close them because they'll take. First of all, your credit limit usage will go down, and you're going to be penalized for closing a card. Okay. There's some cards that tell you, oh yeah, I'll give you this store card if you carry a balance of $1,000 a month. Sorry, that's a no-no, because you're paying interest on that balance that you have to be carrying on the account. They don't tell you that. That's a marketing thing. So I do not recommend if they have to carry a balance. There's many cards that don't even have a yearly charge. But I'm sure most of the ones that you carry a balance on top of it, you're getting billed for a yearly usage, membership, or whatever you want to call it. Okay. And like I said, all credit cards don't charge the same APR, so you have to find out if you're going to get one, which one has the lowest APR. Okay. And this is more or less the same. To carry a balance, so you can earn rewards. Okay, open this card and we'll give you a $10 bonus every month. Yeah, that sounds nice, but in the end, you're going to be paying a lot of interest, and you're going to be paying most likely a yearly fee. Okay, paying off delinquent debt does not erase them from your credit card, from your credit history. It takes between 7 to 10 years to get it off, or get a credit consultant that'll do it for you. There's a lot of ways. Okay, paying an annual fee to get a credit card, you don't want to do that, because on top of it, you're already paying for the interest. Okay, and the other thing is the credit reports are not always accurate, and they're in the eye of the hurricane with the government, because there's so many mistakes, and that's what credit consultants take advantage of. Because we look for the errors. As soon as there's an error by law, they have to remove it. So if you have 5 inquiries, it could be errors, and we submit letters to the credit bureaus, and they have to remove it. Here's an example of a personal loan. With a good score, you might get a 4%. With a bad score, it's going to go up to 36%. Oh, again, depends on how bad is bad and how good is good. Home, paying 30 years, $300,000. You might get a 635 right now. It might go up to 10%. And so the monthly that you will be paying as mortgage is a lot of different. Same with a car, $25,000 car. You can get a 7.22. Well, yeah, I just got one that was a 6 point so. If not, yeah, you could be paying 14. So it helps to get a very, very good credit score. And regarding the mortgage is the same. The higher your score, the lower is going to be your percentage for the mortgage. Okay, here's the same with a car. Same here. With a new car, you might get for a with a high score, you might be paying 4.7%. With a low score, I mean, a used car is going to go up to 530. And if you go down to the lower, I mean, you go from 4.7 to 17.4, and on used cars from 5.3 up to 1839, which is almost like a shopping card. Okay, so what do we do in credit report? I mean, in credit repair. Uh-huh. Because like I told you, the credit bureaus have a lot of mistakes. Well, imagine there's three main ones, and they have to take care of like 250 million people. So that's a very, very good job. So don't expect for them to be perfect. And a lot of it was done by hand up to not that long ago. So what do? We process all the disputing errors on the credit report. Uh-huh. We well, because of the your legal rights, we communicate between the three agencies. We don't just go with the bureau. We also communicate with the client and we communicate with the creditor. So if you have I'm not going to kind of talk about collection because that's something different. But if you have a loan that you finished paying a long time ago and still appears in your credit report, we need to talk to the bureau. We need to talk to you, and we need to talk to the creditor. Mainly the creditor in this case, so they can remove it from the bureau. And credit reports must be 100% accurately, or they can get in trouble with the law because they're, like I said, they're in the eye of the hurricane and they're watching them very, very closely. Okay, so the first thing that we do when, as a credit, sounds like a commercial, but it's not. It's just so you know what happens. The first thing that we know is, like I told you, we freeze the accounts, so they cannot share all your information, all your data when you go for a loan, for a car loan, they can tell the lender, what the issue is, but they cannot share the information. So the lender doesn't have it because the lender is gonna sell it. Okay. So the credit bureau have to respond and resolve within 30 to 45 days. So the process is not from in 1 month. It might take 3 to 6 months to resolve your credit report, and it all depends on the how the banks how they want to do it. They are very tricky, especially collections agencies. They have a lot of tricks. So they can say, "Oh, we did not get the letter," and they're looking at it and it's right in front of them. So that's what we run into. Okay. So every case is different. So you cannot repeat it. You cannot say, "Oh, Joe had the same problem." No, the problems are completely different. So it requires a different case, a new letter. Okay. So inaccurate and negative information may delay each step, and that happens in anything. If you send in a letter and it's wrong, they're gonna return it. Same here with the bureaus. And the bureaus are not, they're very picky, they're very sensitive. They don't like you to tell you, "Oh, well, you made a mistake here. You need to repair it. You need to change it. You need to solve it." They don't like that. And actually, the bureaus, you can only send them like 5 letters at a time. More than 5 letters, they just put it in the bottom of the pile. Because they don't like that. They don't like to work. And like I said, they have their own tricks and tricks and tricks. Oh my God. Okay. So again, what we're saying, we freeze your credit. We help you with pay your rents, your utilities. We send them the ledgers so they can raise your scores. We deal with identity protection, which is nowadays you need somebody to cover you because it's bad. And then one thing, if you're just starting to build credit, then what you need to do is either, and I don't know, when you if you have kids that want to start building credit, you can actually add them to your credit cards as a authorized user. They will not be. They will just begin to create a credit history, and they won't really have a score because they're not putting any money. So it's just mainly the history, and and they can get either a secured or unsecured card. Secured is when you get a card, you put the $500, you can spend the $500. Unsecured is like the bank accounts where you can just spend whatever credit limit they gave you. So I would recommend if you have kids, if you have somebody that's starting, that's a ghost, and starting to build credit, just get them an unsecured card, and it can be from your bank, it can be from 7-Eleven. Yeah. Okay. And the way we protect you is we we tell you how to budget your your financing. We do the credit restoration, and we get you into identity monitor where there's companies. We don't do it. We just sign you up with companies that actually do it, and also companies that monitor your credit. So if somebody is using your credit card, they will let you know. Uh-huh. And we'll help you with the debt payoff. We don't pay it off for you. And we help you start building credit, depending on your finances. So you don't, it doesn't happen again. Okay. And we are ready for questions.
Awesome. Thank you so much. That was really informative. And I hope that everybody watching is, able to take some of that in and really take what you've shared and then put it to good use, right? Because we can have all the knowledge in the world, but we have to apply it. So we are getting some questions in just now as you were wrapping up. So it was really great timing. Somebody's wondering, how do they know if they were sent to collections?
Oh, trust me. You okay? They'll give you a call. First of all, they'll send you a letter. Uh-huh. It's illegal for them to harass you. It's illegal for them to call you off hours. There's a lot of things that the collections agencies can do, but they'll let you know. Trust me. As soon as they buy the contract from whoever was the lender, they'll let you know. They might be able to send you 2, 3 letters, and if you don't respond, they'll continue sending you letters until it gets to a point where they decide that to take you to court. If you're not responding, they'll take you to court.
Okay, so it would be all the correspondence would be through letters like in the mail?
Letters, emails, phones. Remember, they have all your information.
Oh, that's right.
And they're tricky too. You might not know it, but maybe they'll come over to your office. Something like
Oh,
that.
really?
Well, they're very delicate when they do that, but I've heard that they do. And they get in trouble and they don't care.
I had no idea. So are the laws a little bit fluid in that area?
Supposedly no. But it's like a repo man.
Okay.
They have their own tricks. They'll do it when you're not looking. So they have their own tricks. What they want is their money back, and that's the main thing that they want.
Right. And we're in that situation because we did borrow money. We do owe them, right? Like somebody wouldn't be coming after you if you didn't owe them money, right?
Correct.
When it comes
Yes.
down to it. But obviously people get into situations sometimes that are out of their hands, medical, things like that. Somebody's wondering, um, like they've been sent to collections. They're dealing with it. How can they fix their credit while dealing with the people that are collecting the money?
It takes time. It's not immediate. Especially collections takes about 7 years, 7 to 10 years, to remove it from your credit score. But like I said, if you get a credit repair consultant, they'll start. They will send letters to the creditor. If the collection is because you faulted in Macy's or Capital One, they'll send letters and ask. And the letter is gonna say, "Oh, we're going through well, the client is going through a bad situation and he can't pay it. He wasn't able to pay it. Can you please remove it from the credit, from the Ah, from them. And same with the collection agency. We'll write letters, phone calls, and if they don't comply, and then we go through the government and have them intervene.
Wow. Okay.
So when it
So
gets to court, that's it.
is there any way to speed it up from the 7 years?
Begging, just by begging. No, we have letters that actually we kind of beg, not really beg, but we ask that please take care of this. And they're pretty good. Don't think that they're monsters or the bad guys. No, they're pretty good. I've had well, initially when I started with this, I had to call the bureaus to ask to change information. hmm And no, they're pretty nice. When you call them, they're pretty nice, and they'll help you. And because they want to get rid of you. So they're pretty nice. Same with the collections agencies. Unless you start, no, I'm not going to pay you. Don't call me again. Then
So what's the best way to deal with when the collectors come? Like, let's say they're calling, they're emailing. I think the inclination for a lot of people is just to hang up and just ignore them. And I'm hearing you say that that's the worst thing to do. Is what's the best practice? Is it to answer the phone and say, "Hey, listen, I'm trying," or what do you
a
do?
deal. Make a deal. All they're interested in is getting their money back. So if you can make a deal where you're gonna pay them in three payments, or maybe what in a year, every month, some amount, they'll be happy. Uh-huh. So that's the way. Just make a deal with them. Deal with them. We'll deal with it.
What if this person does not have the money? Just figure it
Wow.
out.
Then that would be extreme. If they don't have a job, if they're homeless, they're out on the street, or then that's a different situation. I guess they can declare bankruptcy.
Got it. Now, when you're sending in, you were talking about the different credit reporting agencies and how they all work a little bit differently and how our scores will be a little bit different depending on the one. When your credit is being checked for something really important like a house or a car, can you decide to tell them, "Oh, I want to give you my Equifax report," or do they just pull whatever one they want?
No, they usually, like I said, when it comes to a house, they'll check on the three. They'll get rid of the lowest, the highest, and then use the middle one. hmm And then there's Innovis, which is more into the housing. So no, you can't decide. You can't tell them because then they know something is wrong.
Okay, so you just have to let them do what they do. Is it a myth that your credit drops every time somebody checks on your credit?
Yeah, yeah, it depends. So there's types of inquiry. There's the hard inquiry when you're going for a loan and they ask about your credit. That's a hard inquiry. And like I said, from a car, it might drop 2 points. hmm Like I said, if you go to a car loan and Car Shark, and then they might ask five of his friends, and so you're taking a hit with 2 points, 2 points, 2 points. And if you have already a credit and you want to increase your credit limit to help you with your usage, that's called a soft inquiry. And that does not affect your credit because you already have the credit, you're just making a change. Uh-huh. So when I was talking about the more credit limit that you have, the better. If you can call your credit cards or and just get them to raise it, that helps you a lot. Because instead of having a 20% usage, now you only have a 10% because you raise the limits.
Understood. Yeah, definitely understand that. Now, do you have any tips for negotiating? If when somebody's dealing with the creditors, what would you, what's your advice for that?
Let me ask you, are you dealing with a creditor because of the questions?
What's that? No, no, me. I know. I don't even know how the process works.
No, the only thing that I can tell you is answer the phone. Uh-huh. And if they tell you, yeah, you owe Capital One $10,000, you need to pay, and then you start negotiating with them, and they'll get it down to like 40%. And then you say, okay, I'll pay you $4,000 instead, but I don't have it right now. Can we make a deal? Can we make like a monthly payment? I would deal with them because one thing you don't want to do is end up in court.
You don't want to ignore them. Okay, that totally makes sense. I'm wondering this too. Are you for people that work in all cash? There are people who are like, look, I don't want to get into credit card debt. I'm nervous about getting into credit card debt. I just want to live in all cash. Are they penalized credit wise for that because they're not building credit?
No, they actually what I was talking about ghost people. They don't have a credit because they deal everything with cash. I mean, filthy rich people they deal everything with cash. But they have some things like the houses and stuff that they can't. So that's why they also have a very high credit score. But they deal everything else with cash. So it just does not affect them because it's not credit. Only things that you get out as credit, that's what goes into your credit score.
Hmm. Okay. How often you were talking about how you can kind of check, it sounds like once a year, get that credit report. How should people go about doing that and checking on their credit?
Okay, there is a site from the government that you can check it once a year for free. And then there's the other ones, which is like Credit Karma, Credit Sesame, or you can sign up for a service that they'll check it for you, or in your bank. In your bank, you can check it. I actually check mine every day.
Yeah, I was noticing that I can check mine online with my bank. I can check it all the time, and sometimes I don't know, like, why did it go up? Why did it go down? What are the types of fluctuations
It
that would
should tell you. It should tell you your score dropped because this. It should tell you why it went up or why it went down.
I
And
guess I
Credit
need to
Karma
look
is pretty
further.
good. Credit Karma is pretty good, but it's not actually that accurate. But it gives you just a ballpark.
Okay. Yeah, because and we got another question here. Somebody asking, should I give the collectors my debit card information or how should I pay them? They're wondering if that's a safe way to pay debt collectors.
It's a company. Debt collectors are companies. So the same as you pay somebody else with a debit card, if they take it, most likely they'll want a bank account. So in case you decide, because debit cards, you can lose them. For instance, right now we at Synchrony Bank, since we're handling like 200 accounts, we don't take credit cards. Why? Because you can lose them, you can maximize it, and then everything's gonna start bouncing. So we usually go with a bank account. You're never gonna lose the bank account. They're not gonna close it, like a debit card or a credit card or a checking account. So if they accept it, which I doubt it, you can use a debit card, but I'm sure they prefer to use bank accounts.
Oh, okay. They want a direct, like from a check.
They want to be sure that you can pay monthly.
Okay.
Now
Okay.
you
Yes.
lose your credit card, you don't tell anybody, and then oops, payments start bouncing, and you end up with the same problem that you started with.
Okay. Okay. Gotcha. Now when you're looking at your credit report and you're thinking, okay, I'm about to make a big purchase, like we were talking about cars and houses, and you see, you showed that graph that showed, excellent, and then it went down to good and poor. If you're in the sort of poor range or just think that you have some room for improvement, would you hold off on making a big purchase until you got it up so that you could get your interest rate lower?
That or get somebody to co-sign. If somebody with a good credit can co-sign with you, and then what counts is the co-signer's credit. That's what I would recommend. And if
Okay.
not, yeah, you better hold on because you're going to be paying maybe 10, 20% APR more than if you had a good credit. Unless you really need that couch or refrigerator.
Right. Yeah, yeah. It's interesting. I mean, I'm talking about things like houses and cars, but you're right. That same thing could work for refrigerators, couches, bikes. Who knows? Who would have lawnmowers, whatever people are buying, right? Like whatever they're getting. And I know that next week we're going to talk more about the business side of this, but when we're
Right.
talking about personal credit, personal finances, is there an amount of like what's the highest amount of credit card debt that somebody could have? Does it just depend on how big that
Oh, you
limit
have
was?
no idea. We deal with people that have maybe 11 credit cards, and they're maxed, and they can't pay it. Oh, you have no idea. That's why we recommend you have one or two at the most, and stay away from the store cards. The interests are very, very high. But yeah, no, there's people that have tons because they're high risk. So if they want to buy something on credit, they're gonna be they're gonna be denied.
Mm.
Who wants to sell them a house, or who wants to sell them a car if they're showing that they can't really, they don't have a personality to finance their own money, to administrate their own money. So that's no. But why? How many do you have? I'm just kidding.
Yeah, I'm just being the moderator here. When people are looking at their credit card balances, would a company, if somebody had already 3 credit cards maxed out, would a company give them another credit card?
They would. Why? Because the other three are maxed out. And trust me, I've seen JCPenney gives them, if they have a bad credit, they'll raise their credit limit automatically without even telling the client. But there's other companies that might raise it. Why? Because it's marketing, but because they want you to go to their store to shop because you already have the other three maxed out. Uh-huh. And they don't care if you get into financial trouble. You still have to pay. So yeah, you'll see that you'll see we see that a lot where they just grab another one or they grab another loan just to pay off the first loan and then they get into worse because they're paying more interest. So yeah, people are strange.
Yeah, so it just kind of, I can see how then it would just kind of snowball, because then you're going from store to store to store, from card to card to card, and piling it up and up and up and up and up. And yeah, you can see how that would be really potentially very disastrous and really, scary for somebody to, it could feel really overwhelming. Now, when they're, let's say somebody's at that point and they're like, okay, I have too many. I'm sort of I'm at a turning point. What's the best next step to sort of start to remedy that?
Bank, go to your bank if the bank can give you a loan. But again, if you do that, you're gonna be paying high interest. Even in the bank loan, you're gonna be paying higher than somebody has a good credit. hmm But if that's the only way, then just get a bank loan and start paying off your cards. If you can't, if you really can't, if you're really up to your neck with debt, there's how do you call it? Those companies that can bundle up your debt and give you. It's not restoration.
I know what you're saying. It's on the tip of my tongue too.
Yes.
It's not restoration. I know, but yeah, it's a company. They get all of them, I think, and then
Yeah,
you
they
pay
bundle everything. They
bill.
pay everything.
Consolidation?
Eh?
Is it
Consolidation.
consolidation?
Yeah,
Okay.
is it consolidation? I believe so. Yeah, and that's what they do. They put everything together. So you end up with a huge amount, but they pay off everything. But at the end of the day, if you get them for a debt of $25,000, you're gonna end up paying maybe $3,500 at the end of the day. Mhm. Monthly wise, their monthly is gonna be a lot lower than what you've been paying to all those 10 credit cards. At the end of when it's already paid, if you add it up, you'll see that you paid more. But some people do it. It's good for them because they are able to save more money because they're paying less a month. hmm It's just, and yeah, I guess if you're in that situation, you don't care at the end if you have to pay more. At least monthly, you're not going to be paying as much as, and your score is going to be a little bit better because you're getting rid of a lot of debt.
Right. Right. What's the biggest problem that you see in your industry when you're working as a credit services consultant that you're like, "Oh my gosh, I wish people would stop doing this thing."
Um, everything. A lot of people are not educated the finance, on the planning. So I wish they would do a little bit more planning and stop using credit cards, shopping, store cards. I wish they wouldn't do that because they just max them out. A lot of people just go into a store and yeah, I'll take that earring and that ring, and then they have a $6,000 and they say, "But I already paid it with the card." No, you did not. You just put it in a card. You still have to pay for it. Really, it's impressive. hmm So I wish they wouldn't get the store cards. I wish they wouldn't have to buy things they can't afford.
Mm.
Uh, But then I'd be out of the work.
Because you talk about the stress that I'm sure that when those people are dealing with that, they must be so stressed.
Yes and no, because in a way they're a little bit, I don't want to say ignorant, but they don't really know what's happening. They come to you, you have to explain it to them. They say, oh, really? So they really weren't that stressed because they didn't know what was happening, why the score was so low, why they got denied for an apartment or a credit card.
Because they might be thinking, "Hey, I have a job, I make good money. Why was I denied?"
I make my rent, I pay my rent, I pay my light. Yeah, but your credit cards are just killing you.
Do are is rent, and this may have been in that initial graph that you were going over, is rent or mortgage weighted more heavily or equally to paying off credit cards and things like that?
Your rent payment, like I said, the only thing advantage that you can get about the rent payment is that if you send them a ledger that you've been paying, that you have no
That's right.
faults, then they'll raise your score. They'll take it in consideration for your score. Outside of that, no, you can be paying rent for years, and it won't affect you if because the companies will not declare that, but you can.
Okay. So
Uh-huh.
you just find like Equifax, you find the credit reporting bureaus and type up a letter and say, "Hey, it's me, Jenny. I pay my rent. Here."
You just send them the ledger and you tell them, hey, I'm paying the rent, and they'll take care of that because it's included in their FICO and Vantage algorithm. Just people don't know it, so they just don't do it.
Understood. That's a great tip. I mean, I think that's a really great takeaway. I wasn't aware that you could do that either. I think that's really interesting.
Oh, it
Really
is.
helpful. Yeah, really, really helpful because we want people to be able to, if they're in this situation, to be able to get out as quickly as possible and move on and, hopefully be stress free, or maybe they're already stress free, but continue on with being stress free and not be sort of bombarded by collectors and things like that. Is there a way that you want people to contact you if they have more questions, or should they just come back next week?
Well, they can come back if they have a small business and they want to learn about the credit because it's very different than the personal. Very, very different. I can give you my email, and I thought it was in the invitation, my email and phone number.
It very well may be. It very well may be on there. I'm tapping on it right now.
Can I type it on the chat?
Yes, of course. Yeah, why don't you type that in the chat? And as you do, I will say thank you again to Louise Morgan. You were incredible. That was really, really helpful. Also in the chat right now, if you want more on Sarah National's programs, by the way, shout out. Did you guys notice the new logo? Looking very sleek. There's a new logo on the website, new logo on our sessions. And so we have that to look forward to, is that beautiful new logo as we wrap up the end of 2022. Also, the YouTube channel. So if you have somebody that you think would have found this to be valuable, this exact session that we just went through will be up on Sarah National's YouTube channel by Wednesday of next week. So it'll come out the day before the next session with Luis, and then you'll be able to watch this, get the replay, be able to get screenshots of those slides, everything like that by Wednesday. And then we will be back here, same time, same place, new topic, talking about credit for businesses, which, as he just alluded to, is very different than personal finance. So that's going to be really, really helpful. Hey, Louise, I can't wait to see you next week and continue to learn from you. This was a lot of fun.
Okay, thank you. No, I appreciate the time, and thank you guys for listening and putting up with me. And yeah, if you need anything, I'll be more than glad to consult, help you, or guide you in the right direction.
Really, really kind of you. I have so much gratitude for that. And everybody, his information is in the chat. Don't forget to subscribe to Sarah National's YouTube channel. And I also have to tell you, save the date. Creating Gateways to Economic Equity, May 3rd through 4th of 2023. And you're going to say, Jenny, 2023 seems so far away. I'm not even there yet. 2023 is less than a month away. So May of that year is going to be a big conference with Sarah National. So you see that little save the date screen up on the top. I just want you to make sure and mark that off in your calendar. It's going to be an incredibly valuable event. All right, everybody, we'll see you next time. Bye-bye.